Have you ever wondered why the stock market is where millions of investors' dreams go to die? The most painful thing in life isn't just losing money, it's losing everything. Think back to the 2008 financial crisis. I witnessed almost everyone playing the stock market appearing on TV and in newspapers with anguished faces. Some were even preparing to commit suicide. When all stocks plummeted, whatever you bought, you lost money. Back then, people only had about two problems. First, should I sell my stocks now? Second, if I don't sell, what if the losses get even worse? They described their money as water boiling away, vanishing without a trace. And then they blamed the government, economists, claiming policies couldn't save the economy. This is why so many investors lose money in the stock market. They lose money, but they don't know who took it, then blame technical analysts or bad luck. The stock market is a zero-sum game. If you lose money today, someone else definitely made money. It's just like gambling. If 10 people each bring $100 into a casino, even if you win everything, the maximum you can earn is only $900 because that's all the money in the game. So the question is, when a financial crisis occurs, if everyone around us is losing money, then who exactly is taking that money? I once read a survey showing that in the U.S. stock market, the average loss per investor is about $10,000 to $20,000. The important thing isn't that number, but that if you invest in the stock market and lose less than this average, it means you're already better than most investors. The long-term rule of the market is that most of the money doesn't stay in the pockets of the masses, it falls into the hands of a very small group of truly powerful people. They're divided into 6 groups. And today, I'm going to reveal this, even though it's not based on any specific power, and it might upset some big players. Please support me with a like to help this video avoid being taken down. The first group is brokerage firms and banks. Why, when you turn 18, do you have to learn about stocks? Because as long as you make a trade, whether you profit or lose, brokerage firms still collect commissions. If you don't have money, they're willing to lend it to you with interest. Therefore, this group always profits in the stock market. The second group is the government. They collect taxes. The third group is insiders, such as major shareholders of listed companies or some high-ranking officials. There were reports revealing that some U.S. officials sold off stocks before the government announced the severity of the pandemic. At that time, many people weren't even wearing masks, still thinking the situation wasn't serious.
The fourth group is newly listed companies. They issue shares from scratch. So some companies only earn a few tens of millions, but when they go public, the asset value of the business owner can increase to tens of billions because they don't make money from their business operations, but from the stock market. The fifth group is legendary investors, those with their own philosophies and trading systems, allowing them to make money long-term. I personally am a trend-following investor, which is how I achieve consistent profits. The sixth group? This group is the hunters, the large investment funds. During market crashes, the truly wealthy are them. They silently enter the market. The exact amount of money in their accounts is unknown, but it's at least hundreds of billions, even trillions. No one knows the precise figure, only that the amount is enough to allow them to manipulate the entire market. One of the most famous hunters is George Soros. He arrogantly declared that stock manipulation is the law of the jungle, targeting the weak and never failing. Among the 6 powerful groups, the hunters are the strongest because they can control when stocks surge or plummet.
These fluctuations are known in advance only by those 6 powerful groups because there's a silent understanding among them. Perhaps it's because they possess in-depth analysis, or perhaps it's because some information is circulated internally. I can only speak vaguely, but one thing is certain. The time they make the most money is when the market crashes. The more retail investors participate, the more money they make. So how do these hunters manipulate the market? Why are retail investors always like young sprouts, cut down only to grow back, waiting for the next harvest? And how can you become one of these 6 powerful groups? If you watch this video until the end today, I'll risk sharing that with you. My channel specializes in sharing a wealth mindset to become an entrepreneur, investor, and wealthy person. If you don't want to miss this information, you can subscribe for free and turn on notifications.
Part 1. The Blue Whale Psychological Trap. Why You'll Never Win. First, retail investors are always in a state of information deficiency. You don't know who's manipulating stock prices. You also don't know what traps or plans industry experts are setting. At that point, you'll fall into a psychological trap set by market manipulators. This is nothing short of a mind control game. It's no exaggeration to say that those with malicious intent can use it to defraud assets, even lure you to dangerous places like Cambodia. Have you ever heard of the Blue Whale game? It's a death game from Russia. Anyone who participates is completely under the control and threat of the organization behind it, and no one survives to the end. Outsiders might find it ridiculous, thinking the participants are too foolish. But in reality, those people don't even know they're playing the Blue Whale game, nor do they know that the final task is suicide. This is no different from participating in the stock market. Retail investors don't realize this market is essentially a casino. They also don't know that if they keep betting, the only outcome will be losing money.
The mechanism of the Blue Whale game is very simple. Each day it gives you a small task, such as not talking to anyone for a day, or waking up at a specific hour to record yourself talking to a mirror. As time goes on, the tasks get harder, like self-harm, and the final task is suicide. Outsiders might find this absurd, but these games exploit a fatal human weakness. The more you invest, the harder it is to quit. For example, you're waiting for a bus. You've been standing there for half an hour. At this point, you think, what if I leave now and the bus appears right after? Wouldn't I have wasted 30 minutes for nothing? This lost time is called a sunk cost. The same goes for those playing the Blue Whale game. At the very last minute, when the final task of suicide is presented, they ask themselves, should I follow through to complete the game or give up? If they give up, it means all their previous efforts were meaningless. They think, I've overcome so many challenges. I've tormented myself to exhaustion, to the very depths of pain, and yet, if I stop now, won't it all be for nothing? No, I've come this far. I can't turn back now. I can't lose.
Today you buy stocks. As long as you've invested money, whether it's a profit or a loss, you'll just keep investing more and more. Why? Because if you put in $1 million and lose $500,000, you'll want to quickly recoup your losses. The only way is to invest another $1 million. If you invest $1 million and profit $500,000, you'll want to earn even more. Next time, you'll put in another $1 million and pour both capital and profits, raising your total investment to $2 million. This is greed and fear. Every scam model is based on this. As soon as you put in the first dollar, the scammer will entice you to invest a second amount. At that point, even if your friends try to dissuade you, you won't listen. It's not because you haven't considered the possibility of being scammed, but because you don't dare to face the truth. You don't want to accept that the money you've put in is completely meaningless, that the results you hope for will never materialize. To escape reality, you deceive yourself and sink deeper.
From a young age, your teachers taught you to study hard to get a stable job later. But when you enter the real world, you realize that to advance, you have to compete with others. While you're worried about making ends meet, you just work tirelessly from morning till night. Then one day, a pandemic hits, and everyone around you loses their jobs.
you're lucky to keep yours. But at this point, work is no longer just about living. It becomes a battle of flattering your boss and employer. You remain stuck in a vicious cycle, just hoping you won't get fired, trying to hold on until your children grow up. But then what? You still have mortgage and car payments? Even when you retire, you don't dare to stop working. Meanwhile, why can we travel the world freely while money still flows into our pockets? Because we've built an automated income system on the internet where clients actively seek us out. What we do is called marketing, not direct sales. Now think about it. If the game clearly stated from the beginning that the final task was suicide, would you find that insane? Similarly, when you first enter the stock market, you're absolutely convinced you can make money. That's why stocks have a very low barrier to entry. Even if your parents criticized you, even if others look down on you, as long as you're 18, you can open a trading account and have a chance to change your life overnight. Unlike gambling, no one calls you a gambler, they just praise you as a financial expert. But in reality, the nature is no different.
Initially, everyone treats it like a trial run, putting in a little money to experience the thrill and stopping when they feel they've had enough. No gambler ever declared from the outset, "I must get rich overnight and become a winner in life." But there are people who lack self-control, who refuse to accept the truth that they've lost money. They think that even a small win is good. Once they have that thought, they fall into the gambler's black hole. They continue to bet, but the more they bet, the more they lose, and the more they lose, the less they dare to face the reality that what's lost cannot be recovered. They sink deeper into unrealistic expectations that can never be realized, and then they continue to bet more. Like this, the negative spiral pulls them into a dead end. The gambler's black hole is a black hole because if you take just one step closer, you'll be sucked into its vortex. What traps you isn't external pitfalls, but the trap you've set for yourself. What truly pulls you down isn't the market, but the weakness within your own being.
Part 2. Mastering the game. Who really controls the market and how they take your money? You need to understand that the costs you incurred in the past are a thing of the past. They are not costs you are bearing in the present. For example, you've waited for the bus for 30 minutes, but whether you continue to wait or not has nothing to do with those 30 lost minutes. What you need to consider is, if you keep waiting, will you be late? Should you call a taxi instead of waiting? The stock market is the same. Your next investment decision shouldn't be based on how much you've lost before, but whether you can afford to endure further losses. If you use this money to buy a house now, would it be more beneficial than investing in stocks? These are the things you need to think about. But most people can't overcome this barrier. They cling to the money they've lost, just like why first loves always linger and are hard to forget. Was the ex really that good? Not necessarily. What made it unforgettable was the feeling of being in love for the first time. For the same reason, in this world, scammers always thrive, and in the stock market, young sprouts, referring to retail investors, never run out.
The more people play, the more prey there are. Experts just need to wait a few years for these sprouts to grow, then exploit an economic event, such as a past pandemic or the current annual interest rate hike cycle, to drive stock prices down and reap a massive harvest. So how do these experts at the top of the pyramid leverage their enormous capital to manipulate the market and harvest retail investors? First, where does their money come from? There are many different sources. It could be insurance funds, investment funds, bank loans, or even pension funds that the government forces you to contribute to. But the right to use these funds lies in their hands. They control hundreds of billions, even trillions, with such massive capital that they can absorb all the shares in the market.
Next question. How are stock prices determined? If you've studied economics, you'll know about the law of supply and demand. When everyone wants to buy a stock, but the quantity of stocks on the market is limited, the price will rise. Conversely, if few people want to buy, but too many stocks are being sold, the price will fall. So how do we assess market supply and demand? We must look at buy and sell orders. Suppose there are only 2 people in the stock market. I want to buy a stock for $10, so I place a buy order for $10. At this point, Mr. Ru next to me wants to sell for $10, so he places a sell order for $10. When these 2 orders match, the transaction price is $10. But if I place a buy order for $1 billion and Mr. Vu only places a sell order for $10, the matched price will still be $10. Do you understand? Now, suppose 10 people want to buy stocks for $10, but only 9 people want to sell. After 9 buy orders are matched, there will still be 1 unmatched order. If this person genuinely wants to buy, what should he do? At this point, his only option is to offer a higher price to find someone willing to sell to him. Suppose he places a buy order at $11, but still no one agrees to sell. If he still wants to trade, he will continue to raise the price to $12. Finally, I can't resist the temptation and sell to him. So that stock will be traded at $12. This $12 price is the current price of that stock. The next person who wants to buy or sell this stock can refer to the $12 price to make a decision.
We call the buyers those who predict the price will rise, so they are called the long side or bullish side. Conversely, the sellers are those who believe the price will fall, so they are called the short side or bearish side. Stock price fluctuations depend on whether the long side strength is greater or the short side strength is greater. Not just stocks, but gold, silver, even tulips or agricultural products. As long as they are freely traded commodities in the market, their prices are determined by this mechanism. That's why experts and hunters in the market can manipulate prices as they wish. Suppose I'm a financial expert, and a few years ago, when Bitcoin was only a few $100s per coin, what would I do to make a profit? The answer is very simple. First, I have to ensure that most of the Bitcoin is in my hands, so I will continuously buy. I don't need to buy all the Bitcoin in the market to manipulate the price, but by continuously buying, the price will automatically increase due to dwindling supply. For example, previously, many people were willing to sell Bitcoin for $600. But as supply decreased, the next person willing to sell Bitcoin might only agree to sell at $800. This makes the gap between sell orders increasingly wide. If before I had to buy gradually step by step from $600, $601, $602, $603, now because fewer people are selling, the price will jump straight to $800. Thus, I don't need to spend too much money, but can still push the price up.
Once most of the Bitcoin in the market belongs to me, if I don't sell, no one else will. At this point, I have full control over market pricing. Suppose someone wants to buy Bitcoin for $1,000, but no one is willing to sell because most of the Bitcoin is in my hands. Then I only need to place a sell order at $10,000 to create a false effect. I can use $10,000 myself to buy back those 9 Bitcoins. That means just transferring money from my left pocket to my right pocket. This way, I can push the price as high as I want. The result is that the whole world will see on the chart that Bitcoin just jumped from $1,000 to $10,000 in the blink of an eye. At this point, my total assets have increased tenfold with just $10,000. But the problem is, even if I push the price up to $1 billion, that's just profit on paper. On the surface, my assets seem to have multiplied tenfold, but to actually turn that money into cash in my pocket, I have to sell all the Bitcoin I hold. This is the ultimate goal. However, when I start dumping my Bitcoin to cash out, there's a chance I won't find buyers. Although I've pushed the price up, if no one wants to buy, I'll be in a dilemma. If I keep trying to sell, the price will plummet, and ultimately I might not make much or even incur losses before I can sell all my Bitcoin if buying pressure is too weak. Therefore, the first important thing is to exploit the gambler's black hole psychology, human short-termism, and herd mentality to ensure enough retail investors are ready to buy.
When the economy was at its worst due to the pandemic, the US government began printing money in massive quantities. At that time, even if you didn't understand anything about investing, you saw Bitcoin and stock prices soaring. So what did you do? Most people didn't know how to react, so they chose to observe what those around them were doing.
When you saw Grandma May next door, a 70, 80-year-old lady also taking her retirement money to invest in stocks and crypto, you still hesitated. But a week later, you saw her moving out to buy a mansion. At this point, you couldn't resist any longer. So you opened an account and deposited money to invest. The result was that when you entered the market, that was precisely when stock and crypto prices peaked, and you became the bag holder, helping the experts retreat safely. Don't regret it, because if there's a next time, you'll do the same thing. You'll think you only lost money on paper, but in reality, you've become the collateral for the expert's plan.
Part 3. Escaping the Matrix, Hedging Strategies, and the Smart Person's Path. However, even with many buyers, as I started gradually selling my Bitcoin, my ability to manipulate the market also gradually decreased. At some point, if I hadn't finished selling half of my Bitcoin, the later buyers would also start dumping, causing the price to drop sharply. At this point, I need to find a way to both lock in profits and not lose my ability to manipulate the market. That's why the derivatives market was born. Financial experts will exploit the difference between the spot market and the futures market to short in the spot market while executing opposite trades in the derivatives market to secure profits. This is the strategy of hedging. Here's how it works. Suppose when I hold most of the Bitcoin supply in the spot market, I don't need a lot of capital to push the price up. For example, I raised the price of Bitcoin in the spot market to $10,000, while in the futures market, the price of Bitcoin is still kept at $1,000. When they see such a large disparity, investors will immediately buy futures contracts. Futures contracts have a specific expiration date. For example, they become effective 1 month later. At that time, the contract buyer has the right to buy Bitcoin for $1,000, regardless of the market price then. If 1 month later the Bitcoin price in the spot market is still $10,000, the contract holder just needs to spend $1,000 to buy a Bitcoin worth $10,000, meaning an immediate profit of $9,000.
Due to this large disparity, many investors will rush to buy futures contracts, driving up the contract price. Meanwhile, I just need to place a sell order for futures contracts at a high price in the market and wait for the order to be filled. When the number of contracts I sell in the futures market is equivalent to the amount of Bitcoin I hold in the spot market, I have completed the hedging. At this point, my profit is locked in, and the only thing I need to do is wait until the contract expires. I will deliver my Bitcoin to the buyer at the price agreed upon in the contract, and thus my cash-out process is complete. I can exit the market perfectly. Do you understand? Simply put, it's about pushing the price of Bitcoin up in the spot market, then shorting in the derivatives market at a high price, and then cashing out and leaving. Many people have paid a hefty price in the investment market, even losing their entire life savings, without knowing whose pockets the money went into. But in reality, you're not wrong, because you're just eager to progress, wanting to provide a better financial future for your family and children. However, you need to realize that the free trading market without intervention means the rules of the game are always set by the strong. You have two choices: either become the strong or learn how to follow the strong. As I'm about to say, when we have nothing, the most important thing is to build our own careers rather than jump into investing. It's very simple. Our capital is too small. We won't gain much if we win, and we can't afford to lose. Especially if you're a beginner, you definitely shouldn't risk using leverage or debt to invest. Therefore, you must have a business that generates automated income. During the pandemic, traditional businesses were hit hard. But from another perspective, this was a sign that it was time for us to transform. Delivery services, online shopping, and online courses all boomed because of the pandemic. Today is the era of the internet, and all businesses are choked by two words: traffic. Today's world is a 2.0 world. Whoever has more attention will make more money. With the largest video platforms today being YouTube, TikTok, Facebook, this is an opportunity for ordinary people like us to turn the tables. We can do business in a place with even more foot traffic than Times Square in New York, without paying rent, without inventory, without knowing English, and without even living in New York. Even so, we can still generate a sustainable income of millions of dollars annually. Due to time constraints, we'll stop here for now. I share free knowledge on how to become wealthy, an entrepreneur, and an investor to achieve financial freedom. If you don't want to miss out, please follow my channel, turn on notifications, and share this video with everyone. I also send my best wishes to all of you who have liked this video. May you all achieve financial freedom soon. If you find just 1 or 2 useful insights in today's content that help improve your life, I'll be completely satisfied.